Welcome to our competition Stock Market Learning Plus by the savings banks. For 11 weeks you can learn how to invest like a real broker at the stock market with a seed capital of 100,000 euros. Without any risk, prior knowledge is not required. We'll explain important terms to you so you can get along well in the world of stocks and shares. Today, the StopLimit order. Stock prices are in constant movement. In order to secure their profits and protect themselves against heavy losses, investors have to observe the market well. But that is not always possible, for example on holidays. In this case, stop orders can be helpful. Stop orders are orders that automatically react to specific market movements. If the stock price overrides or falls under a predetermined stop mark, this order will be activated, but you don't need to do anything. An example. You hold 20 shares of the Sneaker Corporation company. They currently have a value of 100 euros per share. You want to secure this stock price because you won't have internet in a while. To protect the share value against a loss, you will first have to set a stop-loss order, for example at 80 euros. When this stop-loss mark is reached or falls short, the order will be switched to a market order and automatically accounted at best at the next market rate, which means it will be sold. In this way, you won't have additional losses in case the stock prices fall down further. These stop orders can also be equipped with an extra limit. If the stop mark is reached or exceeded, in this example 80 euros, the order will be transformed to a limit order instead of a market order. It will be accounted with the next stock price that matches your defined limit. This stop limit order is useful for shares that are subject to strong fluctuations. You can set a stop order for a planned stock purchase as well. Here it is a StopBuy Order. This can be helpful if you want to use a positive market trend but can't actively act at the moment. In this case, the order will be transformed into a market order too, as soon as the stop buy mark is reached or exceeded, and bought at the cheapest price at the next market rate. In this way, you can benefit from a low stock price without having an eye on everything. There is also a possibility to set an additional limit order here, the stop buy limit order. With this, you can make sure that shares won't be bought at a way too high price. Tools like these orders help you to trade safely at the stock market. Just try out how it works. The stock market learning by the savings banks is totally risk-free and everyone can take part, with or without prior knowledge.